Hey, this is June from Turning Point Life Investment, and this video is for the week ending November 15, 2008. So let's start again with our SPY 3-year weekly view. Now, as you can see, we've been in consolidation for a good 4 or 5 weeks already, and we're in the 5th week of consolidation. You can see by this lower shadow that we managed to dip underneath support right here, slowly breaching support, but we failed to close underneath it. Now, volume for this week has picked up a little bit, indicating a little more selling pressure. And you can also tell that the stochastic is also pointing downwards, indicating negative momentum or downward momentum, and the MACD is also in negative territory. Now, by consolidating, by moving sideways, this allows the 20 as well as the 50-week moving average to catch up to it. So it's not as stretched out as it was back here early in October. Next, we go into a 6-month daily view. Now, on Thursday, we managed to breach support, a critical support at the 84 level, but however, we did not close underneath it. Okay, so that's actually considered a head fake, where prices dipped underneath, break support in this case, and close above it. This is typically seen as a rather bullish price action, where it catches a lot of shorts, a lot of bears, basically on the wrong side, and they have to cover their shorts. Now, this candlestick pattern is a bullish engulfing pattern, as you can see here. However, unfortunately, on Friday we did not really have a whole lot of follow-through, as you can see with this prices gap down and had a very good-sized dark candlestick. So it almost gave up the entire rally that occurred on Thursday. So it's not exactly bullish. So as you can see from the current price market action, that the market is not really attracting buyers into buying stocks yet. Okay, there's still a lot of negative momentum. Right, we still are in a downtrend. Nonetheless. Okay, prices are still underneath this 20 and the 50-day moving average. Stochastic is starting to roll over, as well as the MACD. So momentum is still pointing towards negative, even though we have potentially a sign, a reversal sign here. So a reversal sign is only valid if there's follow through. If there's no follow through, then that reversal sign is pretty much invalid. So now we got to see what next week will do into option expiration. Whether maybe the bulls still, if the bulls still have the chance to push higher, then that's good. This reversal sign is holding. But obviously, if it breaks underneath 84 as well as this 82 level, which was Thursday's low, then we pretty much already know that this reversal is invalid. Now, I still believe that we still have one more leg down. However, this last leg is probably going to be a little choppy. It's going to be tricky to trade because it's near a bottom, and near bottoms there's tend to be a lot of whipsaws, a lot of emotional buying and selling. So you can see how bears are starting to be a little cautious. Every time there's a buying frenzy that occurs, they quickly short or cover their short. And likewise with the bulls, they're starting to bottom fish because they know that the bottom is near as well. So you create these really fast movements for the upside and downside. So trading this last leg is going to be a little bit tricky, which I recommend doing spreads. Spreads help you kind of eliminate all the whippy saw action that goes on if you manage to spread above or spread below a certain critical support and resistance level. Okay, lastly, we're going to an hourly view, 60 minutes. Okay, as you can see here, the 84 was support, and I still think it's still pretty good support. Ultimately, it's down at 82. You can see how here on hourly view we had a nice hammer right here putting in support at 82, and that was a really good bullish reversal as apparent with Thursday's afternoon rally. Now on Friday, you can see how we stopped right at resistance around the 92 level, roughly here, and from that point prices basically tanked within the last hour, creating a very nice bearish engulfing pattern. So if 86 breaks, most likely we will test 84, and obviously if 84 breaks, we will test 82, and if that breaks, then we'll look for 80 as the next support. So there's $2, or every $2 there's a minor support level, 82 being the stronger one. Upper resistance 92, and then roughly around the 96 area will be your next level of resistance right here. So the last thing I want to look at is the VIX. I always look at the VIX. Something is interesting development you can see how even with the SPY or with the market in general, we managed to test. Let me go back. We managed to test a low back here in October. But if you look at the VIX, it didn't quite test the highs. So it's showing a little bit of divergence here. Okay, it's telling me that there's not a whole lot of people buying puts, meaning that the fear is not as strong as here, back when we had that humongous decline back in October. So it's showing a little bit of divergence, a little bit of weakness by the bears. Okay, I guess people aren't as fearful as they were when this whole thing started. So, and this is why I feel like, there's still one more leg left in this decline, but this leg is going to be the last one due to the apparent divergence or weakness that's showing right now.